Hey everyone, Chris here from Property Abundance, and I've been asked a lot lately, is the buy-to-let model of investing dead today? Does it still work? And the answer is, it depends. Now, if we look at traditional buy-to-let investing where you have the mum and pop operation, they're using incredibly leveraged mortgages, and by that I mean very high loan to values in excess of like 80 to 90%, like back in the noughties, when you could get even 100% mortgages at some times. Now that means you can borrow, up to 100% of the cost of buying a house. Now, whether you should borrow 100% of the cost of buying a house is a different question, and we don't have time to cover that on this one. But obviously it comes with risk, because if the market does take a dip, you're leaving yourself exposed because you've used somebody else's money with no margin for fluctuation in the price. But back then, when you could borrow 100% of the finance, actually the buy-to-let model worked really, really well, because you only needed either a very small deposit of like 10 to 5%, or you could borrow even up to 100% of the cost of the price, meaning you could buy as many houses as you want, and people did. People started buying lots and lots of houses. It was the buy-to-let boom. Lots of people jumped on the bandwagon. They went, hey, look, property's a great investment. I get capital growth, I get rental income. What other asset class out there both goes up in value consistently over time, save for a few corrections, and provides you with life-changing income from pretty much every deal? I can't think of any. That's because there aren't any. Okay, let's take the other common ones. Precious metals, yeah, they go up in value, but they don't produce an income. Cryptocurrency, very trendy at the moment, right? Although not too many people making money right now on it. But again, doesn't provide an income, just it's asset values. What else we got? Forex trading. Well, there you're trading, yeah, maybe you can provide an income for yourself if you buy and sell enough. But there's nothing quite like property that is safe as houses, goes up in value as consistently as it does, and creates such genuinely life-changing wealth with every deal through the cash flow it generates. Now, if you haven't read it, by the way, read Rich Dad Poor Dad, because it explains the idea of accumulating assets so well on this. But now, back to our usual question. Does buy-to-let still work today? Now, we covered how it worked in the noughties. You understand now how it was very easy to get other people's money and get these deals coming in. But just a few years ago now, I think it was actually 2016, a new tax legislation came into place called Section 24. Now, this meant that all of a sudden, a buy-to-let investor can no longer deduct the cost of their mortgage, the finance costs, from their calculations before calculating that tax. Now, they still have to pay that finance. Okay, it doesn't mean that the interest cost goes away. Of course it doesn't. But you're literally being taxed now on money that you have not earned. It doesn't make sense. Don't look for the logic. We're talking about HMRC here. It doesn't have to be logical. They just want to take your money. But lucky for you, there is still a way. Okay, now this traditional model no longer works as a private investor. If you're doing the old buy-to-let model where you use high mortgage loan to value rates, you rent it out to a single tenant or a couple of tenants or a family, you get small returns, and then you have to try and calculate a profit when you're being taxed on money you haven't physically earned. That doesn't work anymore. But there are a few things that do work. Firstly, there is a bit of a tax loop here, and this was done to try and professionalize the property industry. So if you buy a property in a company name, in a business name, you can still deduct the cost of your tax. Sorry, the cost of your finance, I should say, before calculating your tax. So that older model does still work there. However, at this very moment, interest rates have recently shot up. And again, this has put real strain on the buy-to-let model, even when investing in a company, even when you get the tax break, because people are buying at 70% loan to value. That means that they borrow 70% of the value of the house. They have to put in 30% still as a deposit. 75% and 25%. But now, instead of just paying 1 to 2% on their mortgage costs, which we've all been used to over the last kind of 6, 7, 8, 9 years now, now instead they're paying up to 6, 7, sometimes 7% for that buy-to-let mortgage. So the old school buy-to-let model, even in the commercials, even when you put it in a company right now, is not working. Okay, now this is a problem. We have an issue in the market right now. People have over leveraged themselves. People have bought houses assuming they could afford them into the future because interest rates were so cheap. Now interest rates have skyrocketed. People can't afford their mortgages because the cost of their mortgage now outweighs the income they're getting from their rent. So every month that goes by, even when they have tenants, their wealth is being eroded because it's costing them to service this house now. Now look, this sounds like doom and gloom, but where there's great turbulence like this, there is also great opportunity. Okay, I believe there is going to be a genuine buying opportunity in the market. In fact, I believe it's already here. You can already get houses significantly below their market value just by talking to estate agents. Whereas just a few months ago, when I would call an agent and I'd be pitching an agent for a house and saying, hey, look, would they be prepared to take an offer on this? I'd almost get laughed out of the office. It was such a seller's market. But right now, all the sellers have suddenly gone, holy shit, the market's really high, interest rates have shot up, I can't afford these houses, I need to sell, I need to sell, I need to sell. All of a sudden now it's a buyer's market. Now the people who have the money are able to start snapping up these deals. Now, it doesn't need to be your money. In fact, there are ways that you can work with investors to use their money and help them to procure property in their name or your name, or through what's called a joint venture. Now look, if you're interested in making the most of this massive buying opportunity that exists right now, and you want to learn how you can use other people's money to start building a property portfolio and growing genuinely life-changing wealth for yourself and the investors that you work with, make sure you book a call. Now, if you check in the link in the description below this video, there is a link where you can book a free strategy call with my team as we speak. Now look, these strategy calls will help you get very, very clear on where you are right now, what's stopping you investing right now, where you want to get to, and the route that you need to take to get there. There's also, if you want it, there's the opportunity to work with us on these calls. We run a training program that costs £27, just 27 quid for an entire 3-day program. So if you want a strategy call or you want a bit more information about how we can teach you the entire 3-day program, click on the link below this video. Don't forget to like, share, and subscribe to our channel if you want regular updates on the current property market, what works right now, what I'm doing in my own 7-figure property business, and how you can learn from both my mistakes and the successes that I've had in property over the last 7.5 years. So my name is Chris Peel from Property Abundance. I'll see you in the next video. Bye-bye.